Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you as always for coming on the program.
Good afternoon.
Well, the U.S. stock market was closed on Monday, the day after Christmas, as were many markets in Europe. Stocks in the U.S. were higher, though, last Friday. And here in Korea today, we saw another gain with most of the big names higher, except for those in the battery sector, like LG Energy Solution and Samsung SDI. The exchange rate continued to come down. What's the story today in the Korean market?
Yes, if you look at the Korean market today, it did recover quite nicely. Kospi was up by 0.7%. Kosdaq is up by 1.37%. Particularly if you look at the investors' sentiment, we see that the foreign investors were a major net buyer of the Kospi as well as Kosdaq, particularly the futures market by about 450 billion. And also, if you look at local movement, as the investors, the retail investors are selling because of the tax-related issues, net selling 1.1 trillion of Kospi and 400 billion won of Kosdaq, a significant amount. And most of that selling was bought by the institutional investors of Korea. So clearly, it was a very short-term related issues where the fundamentals were not really acting as what foreign, the local investors net selling. In any case, also if you look at the futures market of U.S., it is showing quite a strong movement with the overall the PC inflationary numbers coming in at below expectations or in line with expectation, and that allowing the overall U.S. market to show somewhat of a recovery, and that is allowing Korean market to do well as well. With this kind of news, we did see the Korean won appreciating to 1266, which is one of the lowest levels since we've seen in the past 1 month or so. And also, we are seeing interest rate stabilization at around 3.66% for the 3 years government bond. And corporate bond rate is at a 5.2%. In terms of the sector-wise, we see that the reopening-related sectors are doing quite well, where the Chinese economy is expected to recover next year with the reopening. We see that the duty-free sector is showing a sharp rise, as well as the cosmetics, also various hotel and restaurant-related sectors did quite strongly well today. So right now, there's a mixed signals in terms of whether the economy will recover next year with the China recovering versus U.S. slowing down. I think that Korea will be benefiting from the Chinese stories rather than the U.S. side. But if the U.S. interest rate stabilizes, then that also is a positive news with the U.S. dollar stabilization and Korean won appreciation in the future.
Well, something else that may be stabilizing may be inflation. Consumers are lowering their expectations for prices going into the new year. The expectation now for the next 12 months is inflation of 3.8%. What do you see happening with inflation going forward?
Yes, as you said, if you look at the local consumer price expectation, it did go down to 3% territories, which is the first time that we haven't seen a very long period of time. Also, we see that the producer's price, PPI, also are showing a slowing down. In October, number was 6.3%. This is the least since the April of 2021. Clearly, that is a significant easing. That is definitely a positive news for the future price index. The price decline on various areas, including agricultural, forestries, and marine products, and also a slow pace for the manufacturing products as well. Electricity, power, gas, the water waste all showed quite a strong rise, but it's still below what it was in the previous month. On a monthly basis, the producer's price index declined by 0.2 percentage point, which is clearly a big change from 0.5% increase in the previous month. All this is affecting positively on the composite consumer sentiment index, which is coming in at 89.9 in December, rebounding from sharply from the 86.5 of the previous month, which was the 4-month lows. Sentiment is improving because of the perspective of the future economic conditions, as well as the future living standard and also current domestic economic situations. Clearly, as we talked about, the inflation pressure is positively affecting inflation expectation to be at 3.6% upcoming year, which is significantly lower than the prior month of 4.2% expectation. Clearly, that is allowing the market to do quite positive implications. That's why probably the Korean market did well today.
Well, now, something you mentioned earlier, and we've seen some effect already on the Korean currency, but the Bank of Japan is now indicating a move toward monetary tightening, bringing the exchange rate for the yen down significantly as well. How do you see tightening by the Bank of Japan affecting the Korean economy, assuming it does go ahead?
Right. Obviously, the Japanese yen appreciation is positive news for the export competitiveness for Korea. If you look at Japanese yen, it edged up to around 132.5 per dollar after Bank of Japan governor have said that the expectation for the central banks soon exiting the looser economic monetary policy is not necessarily the case. But in any case, we did see that they have changed the 10-year yield target last week. That was a surprise. So clearly, that is allowing no longer a depreciation of the Japanese yen. Clearly, we have seen a significant move of Japanese yen depreciation since the beginning of the year because of the various reasons where the interest rates are remaining at low versus the U.S. Continues to raise interest rate. So that caused the currencies to depreciate. But now, with some changes, we did see that the Japanese yen appreciation. If that appreciation that happens, that is definitely positive news for Korean won as well. Of course, Korean won has depreciated significantly following the suit of Japanese yen and also maybe the Chinese yuan. But with the both currency stabilizing and furthermore going into next year appreciating, Korean won is most likely to appreciate as well. Appreciation of Korean won is not necessarily positive news for the export competitiveness, but actually it causes a lot more negative sentiment in terms of domestic consumption and domestic economic growth rate. So we think that this kind of changes that we are seeing in Japan as well as China will have a positive implication for domestic consumption as well as Korean won appreciation in the future.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program. We really appreciate your insights.
Thank you very much.